All right, so when it comes to the stock market, my next guest says the big question everyone's been asking, right? What's wrong with this market? Is it just mostly about volatility, or have the fundamentals collapsed? I want to bring in now Empower Investment, their chief investment strategist, Marta Norton. And, I'm using this chart today because it's more about the constituents in the market, the VIX, EQ, and folks, this shows to me a better picture of the volatility that you are experiencing in your portfolio. So again, it spiked to the highest level since the terror tantrum.
Yeah.
You kind of lean more toward all of what's happening more. It's about volatility. You still believe in the fundamentals.
I do. So, I mean, this is a great depiction because over the course of 2026, the indexes have told one story, but the ride that investors have experienced is a different story. And that's especially the case around AI, where a lot of this volatility is centered. And I think when you think about the surge that we saw in a lot of the different parts of the AI supply chain, that's bound to correct itself. But the question is whether the AI story is coming to a close. And I'm just not in that camp.
Well, we're in the midst of earnings, right? Mm-hmm. And one thing about this is that, again, we've already had this in the A block. We talked a lot about fundamentals. And look at this earnings growth. I don't know. Sometimes I think Wall Street has this thing where we kind of spend a lot of time guessing, is this it? Is this the top? Instead of enjoying the ride, so to speak.
Yes, I mean, the earnings growth has been astonishing. I think when we look at what we saw for Q1 earnings growth, I think we thought, wow, this has got to be the peak. But then we see this quarter, and there is some evidence that there are early signs of AI monetization. And that's not necessarily going to be caught at this headline level, but it is going to be caught with the Microsoft.
I'm glad you said that. What about the Google, right? I thought the Google Cloud story would have alleviated some of the anxiety. Street was looking for 63% growth. We got 80% growth, right? Operating margins, and the margins went from like less than 20% to doubled, right? I mean, I felt like that was giving us this thing, but still the street or the market seems to want more.
Yeah, I mean, there were some astounding numbers there, right? And it was exciting to see, but I think what the street saw was the CapEx explosion there, that continues, and then what was happening to the cash flow. And so I think that story muddied the waters, but I don't think that necessarily means that the doors are closing on that stock.
Well, that's the debate though, right? The hyperscalers, return on investment capital. Does it ever happen? When does it happen? Now, I'm sure you've seen some of these reports and some of these charts that show over the next few years, free cash flow is poised to erupt higher.
Yes, that's what some of the projections are suggesting, that we're having this massive investment, we're paying now and receiving the rewards later. And so that's the expectation. But I think it's okay to be skeptical. I think that's a good thing. It keeps us from bubble-like territory. But at some point, valuations reflect that skepticism. And I think that's the case, at least for some of the hyperscalers today. So
I was reading a note, and you're talking more value, like maybe as a safety valve or just whatever. Even, no matter what area you're in of this trade, AI, software, hyperscalers, seek value.
Yeah, I really do believe a margin of safety is almost always a good thing, but especially at a point like this one where the future is so uncertain, and you get that margin of safety among the hyperscalers, you get it for some of the software names as well.
So when I was looking at that, one thing I'm going to pull up here is a chart of the PEG ratios. I'm big when it comes to technology PEG ratios. So folks, typically, rule of thumb, anything under 1.0 is cheap or something to consider. And look at some of these. Broadcom 0.35, NVIDIA 0.32, Micron 0.03. I mean, this is how traditionally you look at these names. It's a Meta. These names, for the most part, in this way of looking at them, are extraordinarily cheap.
They are extraordinarily cheap, and that's what I'm focused on as well. But I think the market at large, investors at large, are looking at what is it costing to get that earnings growth. And so that's where we're seeing some of the weakness here, where prices, valuations just aren't keeping up because they're saying at what cost. As these companies answer those questions, maybe Microsoft answered that yesterday, we can start to see a bounce.
Another area you're looking at in terms of safety or sector that you happen to like is healthcare. Healthcare's been on fire.
It has been on fire. And what I like about healthcare is one of the things that as we kind of put together a portfolio, we want to make sure we have different factors, different exposures. And one of the things we would want to have is something that is the anti-AI trade. A lot of the market is not anti-AI.
And it's so funny you say that because people think it is. I'm going to do emerging markets. That's AI. I'm going to do small caps. That's AI. I'm going to do relative strength. That's AI.
That's right.
This is not AI.
This is not AI. I mean, healthcare can certainly benefit from AI
Right.
from a research development standpoint, so many different areas of healthcare, but it's not dependent on AI coming together. It's not part of that supply chain. So I do think that's something that makes it interesting if you're worried about hedging your risk, which is worth doing.
Marta, you work with a lot of investors with well-rounded portfolio.
Yeah.
Fixed income, what role does that play right now?
A lot of investors have kind of given up on fixed income.
Right.
I think they think, gosh, we're in an inflationary environment. That's a terrible time for fixed income. Yields have been moving higher. And yeah, it hasn't been a great place for capital appreciation, but I still think at today's levels, yields are far more attractive than they were a few years ago. And if there is a growth concern, fixed income is a good place to go to hide out from that.
So don't give up on it.
Don't give up on fixed income.
Great. Always great seeing you.
Good to see you.
Thanks a lot.